Wealth management has become a common focus for Singapore's banks, with an analyst saying the country's stability and attractiveness to global capital flows are supporting the sector's growth. It comes as the three local banks wrapped up a strong earnings season, with UOB and OCBC reporting higher second quarter profits today, as Beatrice Yap reports.
OCBC's net profit in the second quarter jumped 22% on year to $2.2 billion, helped by stronger than expected loan growth. The bank raised its full-year guidance, with CEO Tan Teck Long saying the loan pipeline remains robust in areas like supply chain diversification and sustainable finance.
Loan growth in the second quarter is exceptional, partly because of some M&A transactions which we are backing. We don't really expect that exceptional growth rate to continue in the third and fourth quarter. It doesn't mean third and fourth quarter is weak. It's just relative to the second quarter. We will be at a slower pace than the second quarter.
Meantime, UOB also turned in stronger results, with a net profit up 10% to $1.48 billion, thanks to record wealth management fees. Its CEO, Wee Cheong, says the bank is sharpening focus in that area as a competitive advantage.
The fact is we are selling our asset management to Allianz, and Allianz is global fund managers that will accelerate our wealth ambitions, right? And that will continue to sharpen, continue to make our capability stronger, as well as better customer outcome. So that itself is taken care of.
Among the three banks, wealth is emerging as a common growth driver. So what's behind the boom? One analyst points to Singapore's political stability and regulatory predictability as a safe haven amid growing geopolitical uncertainty.
I think just the amount of capital markets access and infrastructure and investment opportunities that Singapore provides, I think it does mean that wealth will still continue to flow into Singapore. And on top of that, if geopolitical tensions were to ease, we could see even more capital market activity for that matter.
She adds that rising family wealth across ASEAN could provide further momentum to keep wealth management as a powerful growth engine for Singapore banks.
And for more on the bank results this week and what they mean, we speak to Hui Leong, who is co-founder of the Smart Investor. Hui Leong, good to have you with us today.
Thank you.
Now, the common thread that we're seeing across all three banks, DBS, UOB and OCBC, is that both fee income and wealth management are doing a lot of the heavy lifting. What does that tell us then, you think, about how the business model of Singapore banks is changing?
Yes, so I think one of the biggest surprise for me for the second quarter is that the growth of the non-net interest income, or let's just call it the non-lending business, is growing so much faster compared to the first quarter. So if you take, for example, OCBC, they recorded a 51% growth in their non-lending business revenue. And for DBS, it was 21%. UOB was 15%. So when you have one side of the business, which is their lending business, sort of stagnating, and the other side growing so fast, the composition will naturally change and shift towards the non-net interest income, right? So to give you some examples, for DBS, the contribution was 41% in the second quarter compared to 36% a year ago. For OCBC, the contrast is even sharper because in the latest quarter, the contribution was close to 46% versus less than 36% last year. So I think this is a natural consequence of one side of the business growing way faster than the other.
Yeah, you mentioned stagnating lending. So in this case, do you think that the results are showing that banks can then successfully replace lending income with wealth and investment related income this time?
So I think the question is more about not just replacement, but also growth, right? Because at the start of this year, DBS said that their total income was going to be flat for the year. Now, that's the short way of saying that one side of the business is going to come down, which is their lending business, but the other side is going to compensate for that decline, right? So net, you're going to have a flat revenue for the year. But now, yesterday, they changed their guidance and said that now they're seeing an increase in their overall revenue. So again, when one side of business, which by the way is not coming down by a lot, we are talking about 1 to 2%, and the other side is growing and sprinting, you will see the non-lending side of the business do all the heavy lifting for the banks, at least in the short term.
Yeah, and speaking of wealth, Singapore has banked on its reputation for a long time. It's a very safe place to park wealth. Do you think these earnings are evidence that money is actively flowing here, but because of geopolitical uncertainty?
Well, I think there are things which you know and things which we know that we do not know. I can't tell exactly whether it's primarily due to geopolitical concerns, but what we do know is that the assets under management, the AUM for the DBS, for example, has grown to over $500 billion. For OCBC, it's 350 billion. And on a larger scale, in MAS, they put out a report recently that the AUM for the entire Singapore is at 6.7 trillion. It was up by double digits in 2025, right? But the most interesting part is the composition of that AUM, where close to about a quarter of them is from Singapore, and about 40% actually comes from Asia Pacific outside of Singapore, right? So definitely MAS is trying to attract more money into Singapore shores.
And how much of this growth do you think is because of broader, more structural shifts in Asia's wealth, on top of course, the global uncertainty?
Yep, so I think the answer from the DBS CEO, Tan Su Shan, was really interesting because she's saying that it's not just about wealth relocation, but it's about wealth creation, right? So she gave two very good examples, I feel. Taiwan, for example, the GDP growth is over 13%. It's primarily because their semiconductor sector is benefiting so much from the boom in AI infrastructure. India, which is experiencing growth in its middle class, is seeing GDP grow by 8%. And the key here is that they are not waiting for this money to come over to Singapore, right? DBS has a plan to actually grow its AUM to 1 trillion by 2030. And the way they're going to get there is to set up 18 wealth centers around Asia. So they're not going to just wait for money to come to Singapore shores, right? They're going to where their customers are and meeting them where they want to be.
And speaking of this comparison with other countries that are quite aggressively pushing for wealth growth, can you tell us what advantages you think Singapore banks have, and in what ways are we still kind of falling short in that sense?
Yeah, so this may be above my pay grade, but I'll try my best. So I think there are some core advantages where Singapore has, which is being the trusted guy on the block, and also there's a deep ecosystem and wide, vibrant ecosystem in terms of financial products and so on. But I don't think they can just rely on these two things, me being the most trusted guy and therefore you must send money to me. I think they do have to also take tactical moves. Like recently, they've reduced the onboarding process for private accounts from 6 weeks down to a month. And there's, I think, a lot of such moves which they have to make to continue to keep them competitive. So they can't just rest on their laurels and say that I'm the most trusted and therefore you should send money to me, right?
Hui Leong, thank you so much for your analysis. I've been chatting with Hui Leong from the Smart Investor.